Good afternoon. Welcome to the Monetary Policy Stance press briefing. Before we introduce our speakers, we would like to inform everyone that the monetary policy statement has been uploaded on the BSP website and X account earlier at 2:30 p.m. For the full statement, you may check said platforms. Let us now welcome the following. Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor Eli M. Remolona Jr. Deputy Governor Zino Ronald R. Abenoja of the Monetary and Economic Sector, and Officer in Charge Dennis D. Lapid of the Monetary Policy Subsector. At this point, may we invite Governor Remolona to share his remarks on the monetary policy decision.
Good afternoon. I hope you like the new format for our monetary policy announcement. As you know, earlier today, the Monetary Board decided to reduce its key policy interest rate. The target RRP rate will now be reduced by 25 basis points to 5%. Based on the latest data, I think this puts us at our sweet spot for both inflation and output. The projected inflation rate over the next year or so is where we want it to be. Output is moving to where we think our capacity is. The policy rate itself is at our Goldilocks rate, neither too high nor too low. I would characterize this as still dovish, but slightly less so than before in terms of the forward guidance. We came to this decision after weighing many different scenarios. We looked at a central scenario, a relatively hawkish scenario, and a relatively dovish scenario for both inflation and output. In the end, we chose the central scenario for both. We had to look at so many scenarios because there's still a lot of uncertainty. Overall, we see the inflation outlook to be very manageable and inflation expectations to be well anchored. But we still see more significant risks to the inflation outlook than to the output outlook. Thank you.
Thank you very much, Governor. May we now request Deputy Governor Abenoja to elaborate on the BSP's inflation forecast for 2025 to 2027.
Thank you, and good afternoon. For the inflation forecast, we would like to share that for 2025, the average inflation rate is projected to be at 1.7%. For 2026, it's 3.3%. 2027, 3.4%. So as we can see, the inflation path that is projected moving forward continue to be the same. In the near term, we think inflation will be benign, but for the more relevant horizon, 2026, 2027, it will be within the target of around 3.3, 3.4% average for both years.
Thank you, DG Zino. We now open the floor to questions. We will first accommodate questions from those on site, and this will be followed by questions online. For our on-site participants, reminder to please raise your hand and wait for the microphone to be handed to you. Please also state your name and your organization. And we are now ready to take your question. To be followed.
Just to follow up to your comment, Governor, on the inflation, you did say that there's significant risks in your inflation outlook. If you could elaborate on what these risks are and why, despite characterizing these risks as significant, this is not stopped the central bank from cutting rates this time around. And does that also mean or just leave the door to another rate cut, having flagged previously that 2 more rate cuts is possible this year? Thank you.
No, I think the main risks are in terms of electricity prices, and then food prices remain a risk. Even if those risks materialize, I think we're likely to be within the target band. What was the rest of the question? What was
Why, despite describing them as significant, this did not stop the central bank from easing rates for the third consecutive meeting this today, and whether you're leaving the door to another rate cut, having previously flagged that 2 possible cuts before the end of the year, as you said, this is possible.
Yeah, there's still a possibility for another rate cut, but just a possibility. We're not saying it's likely.
Thank you, Governor. We have a question from Ian.
Good afternoon, Governor. Ian from Inquirer. Sir, you said that we're now at the sweet spot in terms of we're now at the sweet spot in terms of both inflation and output. And I mean, earlier you just mentioned that another rate cut is just a possibility, not likely. So does this mean that it is already the end of the current easing cycle?
With the data we're looking at right now, yes, it would be. But as you know, the data can change. The sweet spot can move. So we'll have to, as we always say, we have to look at the data.
Thank you, Governor. Any other questions from the floor? From the side, please.
Hello. Good afternoon, Catherine Check from Business World. So since the Fed already signaled po possible rate cut to the next meeting next month, meeting next month. So would this also affect your rate cut prospects going forward? So could the increased likelihood po of this cut by the Fed also push you to revise your said sweet spot po?
Yeah, I think what's already priced in the market is for the Fed is a rate cut in September and one more rate cut for the year. So 50 basis points in the rest of the year. We don't worry too much about that. As you know, we used to worry that if our policy rate is within 100 basis points of the Fed's policy rate, if that spread narrows to less than 100 basis points, then the peso might depreciate. We don't see that anymore. That doesn't seem to be happening anymore. The differential has been less than 100 basis points for several months now, and yet the peso has been appreciating against the US dollar.
Thank you, Governor. Follow-up question.
For DG Zena po, sir, good afternoon. You mentioned earlier po in the Senate that US tariffs could help ease inflationary pressures in the Philippines. So how does this affect po your outlook on inflation?
I'll let Deputy Governor Zeno answer that. He's the expert on tariffs.
Thank you, Governor. Thank you for the question. These developments in the tariffs were already incorporated in the inflation outlook that we have described earlier and was considered in the latest policy action. As I have mentioned earlier during the Senate hearing, the uncertainty and also the slowdown, possible slowdown in global growth has reduced demand pressures. And this has contributed to the benign conditions that we are seeing right now in terms of overall inflation. So that has been taken into account in the path that we have just described. Benign inflation this year, within inflation target for the next 2 years.
Thank you. Thank you, DG Zeno. Any more questions?
Gov, good afternoon. Just to follow up also on the likelihood or the possibility of further rate cuts down the line for the remainder of the year. Is there a risk that the inflation could overshoot our 2 to 4% target next year and in 2027 if we further cut rates? Because if you look at the latest forecast, it's slightly above the midpoint of the target.
So our forecast is that 2026 at 3.3, 2027 3.4, still within our target range. There is a risk, yes, there is a risk that will exceed 4%, but that we think is a small risk.
And in your view, Gov, just a follow-up, what would warrant further rate cuts at this stage? Because as you mentioned, we're already at Goldilocks rate at 5%.
Yeah, if in the data that we get from now on, and also the soft data that we look at, we see output as weakening considerably, then we would probably cut the policy rate further. The soft data that tends to suggest weaker output growth is mainly sentiment data, what we call the ISM data. So we do surveys, and they tell us whether they expect to build up inventories, to buy more things. So these are businesses, and that data looks like output will be weaker than before. Zeno.
So if I can add, Governor, so if you look at the PMI data that's been released for the past 2 months, for June and July in particular, we've seen a decline below 50 index point level. And as the Governor has mentioned, looking at some of the components in terms of inventory levels, job orders, hiring plans, which they seem to indicate that in the near term, there could be some moderation in economic activity. This is one risk that has been considered in assessing the policy stance at this round, and again in future meetings. Thank you.
Thank you, DG Zeno. Thank you, Governor. Next question, please.
Good afternoon, Gov. Mike Arceo from the Manila Times. It was stated in the statement that there is still risk on the global activity, which could then temper the outlook for the Philippine economy. I'm just curious if the BSP has estimates on like how big of an impact yung past rate cuts, like percentage points that it could contribute to the Philippine economy. Is it significant enough to lift the economy for at least 6%? Thank you.
Are the rate cut significant enough? I think so. We, as you know, we don't just move the rate and then reverse ourselves. Usually, it goes in the same direction, and the cumulative effect of that is significant enough to strengthen output growth, for example.
Thank you, Governor. Next question.
Hi, sir. Kai Ordinario from Business Mirror. I just wanted to ask, what's your outlook for GDP? You're talking about all these risks, and how are these risks going to affect growth?
I think Zeno has memorized those numbers.
Thank you, Governor. So, given the cumulative policy rate cuts that we have had since August, we think that the MG numbers, target numbers, could be feasible this year. That is about, the low end is about 5.5%. We think we could be there. The further impact of those policy actions could also be felt moving forward. There could be improvement, more momentum moving forward. such that by the end of, let's say, 2 years from now, we still think that it will be consistent with what the government is targeting. If you can remember, the DBCC numbers are at least 6% over the medium term, but this year it's at least 5.5%. So those numbers are consistent with what we are seeing in this monetary policy stance.
Thank you, DG Zino. Next question, please.
Good afternoon, Bob. Victor from GMA. No, just wanted to ask regarding the inflation outlook. For this year, it was slightly higher than the previous meeting, and for next year, it was revised downward, and for 2027, it was revised upward. Just wanted to ask for more details on that. Thank you.
So we're
Slightly higher than for 2025.
yeah, we're saying 3.3% in 2026 and 3.4% in 2027. This is slightly lower actually for 2026 and slightly higher for 2027.
Thank you, Governor.
Hi, Gov, at Bloomberg. Gov, you described the policy rate now as being in a Goldilocks. It's a Goldilocks rate. So, looking ahead in the October meeting, how would that impact your view? Is it likely that you will pause for that meeting for the next one?
The Goldilocks rate can move a little bit, so that will be a factor. The way we estimate it, it will move a little bit. We also look at what we call the output gap. Are we close to capacity? Are we well below capacity? So we also have estimates of that. Those are two different ways of looking at whether the policy rate is too high or the policy rate is too low. Neither number is precise, so we have to use judgment in which to help us decide which one is the more important one. It so happens that now they're saying the same thing. They don't always do that.
So, Gov, for the October meeting, what sort of data would convince you to move this Goldilocks rate even or tweak this a bit? Are you looking more closely on growth, our GDP growth data for that particular instance, especially since inflation is very manageable?
We estimate them in at least 3 different ways. We used to do them in 4 different ways, but the 4th one wasn't so good. So we now use 3 different estimates. They all kind of saying the same thing now, which is that we're there. We also estimate what we call the output gap 3 different ways. But it so happens that at the moment they're saying the same thing, and that we're basically at 0.
Thank you, Governor. Any more questions? We can proceed to a question sent online. This is from Mr. Michael Ricafort of RCBC. Mr. Ricafort is asking, if the long-term Fed dot plot estimate is at 3%, what would be the local counterpart at the BSP for the long-term local policy rate estimate?
We don't do dot plots, as you know. But so far, the discussion within our monetary board suggests a very strong consensus. And for now, 5% is where we want to be.
Thank you, Governor. Any questions from the floor? Okay, let's read another question online. This is from Ms. Christina Ulang of First Metro Investment Corporation. She's asking, is the current liquidity parked with the BSP at high levels? And will the easing cycle bring this level to a sizable reduction in the near term? What do you deem to be the appropriate level in the current easing cycle?
Liquidity, I think, is still more than we think it ought to be, but we're managing the liquidity in a somewhat different way. We have what we call monetary operations. For now, what we're doing is we're issuing BSP bills that soaks up liquidity, because for now there's too much liquidity, we think. But we're trying to do it in a somewhat different way. Our liquidity operations for now are concentrated near the short end. But we're holding a lot of GS, we're holding a lot of government securities. So if we want to soak up some liquidity, we could do it either by issuing BSP bills or buying or selling, actually selling some of our government securities, which we hold in our portfolio.
Thank you, Governor. Any questions from the floor?
So, Gov, based on that, as you mentioned, there's still ample liquidity in the system. So, do we expect that the easing of the bank reserve requirements would be out of the table, at least for the year or for the time being?
I wouldn't say it's not on the table. I think we're just trying to look at the right timing for it. I think 5% is still too high.
Thank you, Governor. Question from...
Hi, Gov. Good afternoon. Do you see banks making corresponding cuts in their lending rates? I understand that BSP has already reduced its key rate by 150 basis points. Would you require them to if they are not? Thank you.
No, we don't require them to, but we're seeing suggestive evidence that deposit rates, not so much. The reserve requirements are supposed to, when we reduce the reserve requirement, that's supposed to help deposit rates go up a bit, and then loan rates to go down a bit. The data that we have doesn't show that directly, but we have suggested evidence that that's happening. We're working on improving our data on that.
Such reductions are enough to spur consumer spending. Thank you.
Yes, yes.
Thank you, Governor.
Hi, Governor. Good afternoon. This is
Azina wants to add to that discussion.
Sorry, Governor.
So we have seen some adjustments in lending rates, as the governor has mentioned. And if we look at the latest numbers for lending rates for commercial, for the big banks, so the past two data pins, they've been growing year on year, 11%, 12%. Some of that is on consumer lending, but also production sectors were also a recipient of this credit being done by banks. So both production and consumer sectors have benefited from this liquidity that is more available to the system right now.
Hi, Governor. Good afternoon. This is Keisha from the Philippine Star. Just to clarify, with inflation staying low, how much policy space does the BSP still have for further easing this year? You have 2 more meetings pa, no, in October and in December.
I think we have space for one more cut. If the data develops the way we think it will develop, then maybe one more cut this year.
So follow up, Governor. So 1 more cut and that's the end of the easing cycle?
I think that's a likely evolution of the policy rate. Of course, if something bad happens to output, that suggests there's a lack of demand, then we may cut some more.
Thank you, Governor. Any more questions? We have two last questions online. So the next question is, any thoughts on use of the BSP securities as a primary tool for liquidity management rather than the RRP and the TDF?
I think we're beginning to move away from our short-term issuance of BSP securities. We still have enough government securities in our books, and there's enough of it so that we can reduce liquidity just by selling some of the government securities that we hold.
Yeah, that's fine. If I may.
Yes, please.
Like many central banks, we tend to concentrate our liquidity absorption in the so-called term instruments, so longer than overnight. So I think we use the overnight RRP as a way to signal and enforce the target rate for the policy rate. But the bulk of our liquidity absorption, like most central banks, tends to happen with the term instruments. But right now we're trying to figure out where the market demand is, and it seems from the recent auctions, it seems like there's less preference for the bills and maybe more inclination towards the shorter instruments, and that could be maybe a short-term phenomenon, or it could be a longer, a more longer term thing. But so that's also something we're studying. But I think we're also working towards making the BSP bills closer in terms of its features to the government T-bills, and make them as close substitutes as much as possible, and to improve their market reception and acceptability.
I think you should look at our liquidity operations as similar to monetary policy, but we want to change that. We think, or I think, maybe this view is not shared by the rest of the BSP. I think we've been spoiling the banks by helping them manage liquidity too much, whereas in other places, in Thailand, in the US, there's a money market that allows banks and other entities to manage short-term liquidity. We don't have a money market. Somehow our money market disappeared, and part of the reason may be us. Maybe we're the money market for them, maybe. But that's something we're looking very closely at.
We're also looking at reducing the incentives for the market to put their money with the BSP, and also and instead increase the incentives to trade with each other. And maybe one way is, as you described, is maybe look at the bond portfolio and maybe try to reduce by selling some of it.
Yeah, we have managed to introduce in the Philippines what's called the GMRA contract. This is the standard contract for repo transactions. It was introduced in the 1990s, and we haven't been using it. But now we've agreed with the banks that we will use the GMRA contract, and we hope it will help develop the repo market.
Thank you, Governor. Thank you, OIC Dennis. I think we still have time for one last question. This is from our Facebook page. With the recent 25 basis point rate reduction, is the BSP open to a more flexible inflation target like the US Fed stance, on allowing temporary deviations in inflation to balance growth and price stability?
We're happy with our target. We're happy with the way we're doing it. Maybe the way we announce it is not quite what we have in mind. I think we might say in the future 3% plus or minus 1%. So instead of a target band. Because the target band kind of suggests that if we're at 3.9, very close to the ceiling of our target band, that's as good as 3. That's not really the case. 3 is better than 3.9. But the way we say we have a target range doesn't seem to convey that message.
Thank you very much, Governor. Any more questions? All right. If there are no more questions, we would like to thank everyone for their time and attention this afternoon, including those watching us live on Facebook. This ends our Monetary Policy Stance press briefing. Maraming salamat po.